again, everybody. Hope you had a Merry Christmas and a great 2024. Colter Brown here from the Northern Ag Network with this month's livestock market report. Well, this is a good time to be in the cattle business. You know, we set record highs for nearly every class of cattle this year. After challenging years of drought and high costs, it's good to restore some profitability to the industry and heal up balance sheets as well. Today, we're going to put a bow on 2024 and talk about what this next year may hold for the cattle market. We'll, of course, look at the futures, fed cattle and calf markets, spend some time on bred cows and bulls, and discuss where we're at in the cattle cycle with beef demand, exports and imports, and some of the other factors affecting our market. First, though, I want to thank one of the sponsors of our report, Nutrilix. Of course, winter is here, and the last thing a busy rancher wants to do is wrestle feed bags in the bitter cold and dark. Let your trusted local Nutrilix dealer provide your cow's whole herd health with a custom Nutrilix liquid ration. Nutrilix provides the necessary vitamins and chelated minerals along with added protein that fills those nutrient gaps. When feeding your herd this winter, choose the supplement proven to help maintain body condition scores and keep your cows working for you. Well, we'll start out here looking at the futures market that had a pretty good 2024, but really it was this fall and winter that saw the market just surging higher. None of us expected to make the big gains we did during the Christmas week, especially in the feeder cattle. That's where we saw the biggest run. The January feeder contract finishing the year near its highest point since March, gaining $23 in the fourth quarter alone. In just the last month, feeders gained $3 to $4, much of that coming during the Christmas week. In the live cattle, we saw things pick up as well. Not the big gains in the fourth quarter that we saw in the feeders, but still up $5. Always like to look at the April contract. That's going to be the high point for the year, and we ended 2024 with that April contract its highest since Memorial Day. Much like the feeders, the live cattle contract's about $3 to $4 better in December. Now, it's easy to miss how strong the cash-fed cattle market's been. Since Thanksgiving, we've seen live sales $8 to $9 higher, dress deals $15 to $16 better. Now, packers did get a lot of cattle purchased for deferred delivery right before Christmas, so they weren't as aggressive in the market at the end of the year, but still we worked higher on the cash. Live deals trading at an average of $195 and dress sales climbing by leaps and bounds, averaging near $307 to end the year. Now, the box beef cutout took a little longer to find its holiday rally than we thought it would, but once it did, that price held in there very well. Demand has been a strong point for this industry. As we look forward, inflation and unemployment are going to be two key factors to watch, but right now demand remains supportive. And as we think about producers responding to what the consumer wants, we're producing the highest quality beef ever, so demand definitely a bright spot and could be the key to how high these prices move that beef demand holds in there. Not going to take us long to cover this month's Cattle on Feed report. It came in right where it was expected. Total inventory just narrowly above last year's levels. The placements coming in 4% lower, and marketing's a touch higher than expected, down 1% from a year ago. Now, the next report is going to be really interesting to watch because we'll see the full impact of 1 month of no Mexican imports allowed for cattle. That, of course, due to the screwworm outbreak in Mexico, 100,000 head of cattle a month come to Mexico, to the U.S. from Mexico rather. So we'll see the full impact of that. I do think our market's probably going to open up soon to those Mexican imports, which could put some pressure on the futures. Now, as we think of 2024 and we started the year, we were thinking we'd see a significant pullback in fed cattle slaughter and beef production. That's not really what we saw. Of course, with lower cost of gains and these high cash-fed cattle prices, that encouraged us to feed these cattle for longer to record high carcass weight. So that put more beef on the market. Some areas did fight drought again this year, which caused those placements to be pulled forward and put on feed early. Of course, imports were higher. We saw higher live cattle imports, but record high beef imports this year. And then once again, continuing to see more beef being produced coming from the dairy sector. And that's going to be an important thing to watch this year. Of course, that beef on dairy cross has become more profitable and more popular too, just adding immediate value for dairy producers to breed the beef semen onto those dairy cows. Of course, the industry's been profitable, but growth is constrained by a shortage of replacement heifers. So we may see a shift there, more of those cows being bred for heifers, so that could decrease the amount of beef production we see on the fed side coming from the dairy herd. So combining that with the smaller calf crop that was produced this year, and we probably see beef production move lower this year, especially as the 2024 calf crop moves through the supply chain, probably down 2 to 3% in beef production. The interesting thing in January to watch is going to be at the end of the month with the cattle inventory report to see where the beef cow herd comes in. Expectations say could be lower, could be a little higher. I'm expecting to be down 1% in beef cow numbers, somewhere around 28 million head, which would be the lowest in over 60 years. We'll be watching that replacement heifer number very closely. It probably will come in higher. We've seen enough incentive to retain heifers, but not enough, I don't think, to say that we're really expanding this herd. Most of the livestock economists that I read are saying 2025 is going to be another stabilization year in the beef industry. Now, of course, prices are encouraging expansion at these levels, but we've also got some headwinds too. Interest rates are telling us we don't want to use debt to grow the herd, and drought does remain a threat. The long-term forecast says we could return to La Nina in 2025, could be dry in our part of the world. We're not going to want to grow these numbers significantly if we don't have the grass. Now, if it's wrong and the weather turns out to be a lot better, we could retain a lot of heifers, but even so, if that happens, we'll move a lot of heifers from feeding channels to replacement channels. That's just going to further constrain beef production, which only helps the price. So it looks to me like 2025 is going to be a pretty good year for producers. A couple more things I do want to touch on. We've talked a little about trade already. Exports came in better than expected this year. We were down from a tonnage standpoint, but by value, this is probably going to be our third strongest year ever from beef exports, contributing $430 per head of fed slaughter. Now, imports we mentioned were higher this year, most of that coming in the form of lean trim. Those imports probably going to increase again next year, largely a function of where we are with domestic prices and, of course, a strong U.S. dollar, making it cheaper to import beef. Also on the feed cost side here, we're at a pretty comfortable level of corn stocks to use, so probably not a lot of movement in the corn price, maybe staying in that $4 to $5 bushel range, maybe 4.25 on the low end. On the hay side, though, of course, we saw prices subdued this year. We brought a lot of hay forward from last year thanks to an open winter, but if this winter gets as hard as the weather forecast says it might, that could work through some hay supplies. Dry conditions next year could decrease production, and then much more locally, if we think of the St. Mary's siphon repairs happening, we may not see a lot of irrigation out of the Milk River this coming summer, which could be tough on those guys up north. Could see more hay move in that direction, so I'm thinking hay prices will be higher in 2025. Now we want to dive into how the calf market finished the year, but first, a quick message from the Wyoming Beef Council. Well, the calf market also bucked seasonal trends this year. We saw it moving higher into the summer, record high video sales. Then August came and we saw a big pullback as the futures and stock markets, everything plummeted. As we got into the fall run, when all these calves are coming to town, that's when prices just started grinding higher, and over the last month, we've seen them surge upwards. I think these are the highest prices we've ever reported. 5.5 weight steer calves, probably going to finish the year nationally with an average at 310, likely up another 5% next year. But really, as we're talking light 5 weight steers averaging over 350, heavy 5 weights near 330, 6 weight steers, a lot of them selling over $3 a pound. This is a really strong market. As we look at the cull cows and bulls, of course, that was impressive all year long, largely driven by the reduced culling rate. We culled so deeply in our cow herd, we just didn't have the numbers to do it again. Thank goodness we didn't. Of course, demand for ground beef is really pushing that market along. We backfilled that with imported lean 90s trim. We've talked about the imports there. I think it's going to be a pretty similar case next year, probably seeing that cow market somewhere in the 120 to 150 money. A very successful fall bull sale season. Kurt Kangas, American Angus Association rep for Montana and Wyoming, said over 3,000 head of bulls sold to commercial buyers. They averaged 8,241. That's up 16% from last year. Of course, demand for commercial bred females very strong, not just at the production sales, but we saw some real big stock cow sales. Between the Blue Ribbon and the BLS Northland cow sale, over 12,000 head sold. The bred heifers and young bred cows selling 20 to 33% above the same sales a year ago, and the older bred cows selling even higher above last year. They were up 38 to 45%. And lastly, we saw the lamb prices continue to push higher after a really tough start to the fall, seeing pretty good demand for lamb at the retail level, so that's helping to keep product moving. A lot of those 60-pound lambs finished the year averaging $2.45, 70-pounders near $2.25, 80-pound lambs averaged $2 a pound, and the 90-pounders $1.75 to $1.80. Well, we certainly covered a lot in today's report. Thanks for joining us. Hopefully some food for thought and information you can use. It does look like there's a lot of opportunity for this livestock market coming this year. Well, thanks so much for joining us. From all of us here at Northern Ag Network, I want to wish you a blessed and prosperous 2025. Take care.